Welcome to the Service to Syndication Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, capital raisers in the world who have worn the uniform of this great country, those who provide services to our men and women in uniform, and other service-oriented professionals to provide you with the tool sets, the mindsets, and the skill sets to help you conquer your dreams and goals in real estate and to use this wealth creation vehicle so you can live a more successful, happy, and fulfilled life of generosity and prosperity. If what you desire is time, lifestyle, and financial freedom, you've come to the right place. We will bring to you the best real estate entrepreneurs who will give you the insights, the knowledge, experience, skills, so you can go out and crush it in whatever real estate asset class you desire. So grab a pencil and paper, sit back, and enjoy the ride on the Service to Syndication Podcast. Hello, my service men and women and other service providers. Welcome to another episode of the Service to Syndication Real Estate Podcast. I am your host, Cedric Marlow. Here on the Service to Syndication Real Estate Podcast, we interview the most successful investors, real estate entrepreneurs, capital raisers in the world where most have donned the uniforms of our great country. We aim to provide the tool sets, the mindsets, and skill sets for you to achieve your personal and business goals while using real estate as a wealth creation vehicle to help you live a more successful, happy, and fun-filled life. I am super excited today because I have with me Mr. Kolodinko, who is a top-notch fund manager. But before I properly introduce our exciting guest to you, I want to ask a favor of you. Please, if you get some value out of this interview, if you get some type of insight, mindset shift, if you learn a new skill, new information, receive inspiration or motivation to go out and take some progress in your life, please share this episode with some of your friends. Send it to someone you know who might be or could be interested in real estate. Share it on your social media, post it on your wall, or share it in your stories. Help us spread our message while you help others. And for all of you who share this episode, I want to say thank you. Again, everyone, I have with me Mr. Alex Kolodinko. He is co-founder of WealthyMind Investments with over $2 billion in commercial real estate transactions and experience as a fund manager, general partner, and passive investor in more than 60 deals. Alex helps others build wealth through passive investing. After a successful career as a Silicon Valley tech executive, he transitioned into real estate to create financial freedom for himself and his investors. At WealthyMind Investments, he oversees deal structuring, due diligence, investor relations, and strategic partnerships, all while staying committed to personal growth, giving back, and enjoying time with his family. All right, Alex, first off, welcome and thank you for being a part of this podcast. Well, the first thing that I like to do is to try to have my guests summarize their real estate journey in 75 seconds or less, and then we'll just unravel a lot of that.
No pressure. Well, first of all, thank you for having me, Cedric. I appreciate the opportunity. I think my journey is all about the key word is perseverance. You're going to hear a story from an immigrant from Ukraine who came to this country looking for opportunity, didn't speak English, didn't have nothing, no friends, no money, no culture, of just having a dream and then going through a corporate ladder, ultimately becoming an entrepreneur. And I do consider myself a successful person, so I'm happy to share where I was versus where I am now.
Awesome. All right, Alex. So you spent over 20 years in Silicon Valley as a tech executive. What lessons from the tech world have helped you succeed as a fund manager and real estate investor?
That's a great question. So first of all, building relationships. Real estate is definitely very heavy involved in talking to other people, deal structuring, asking the right questions, creating relationship, not transactional, although you do want to ultimately make a move and make an investment, but at the same time, you cannot be just purely focused on that. Having that flexibility, having negotiation, having planning, having the right strategy, it has helped me quite a bit to transition to entrepreneurship role. Although some skills are transferable, entrepreneurship, I can tell you, and so many people that are considering doing that, is definitely 10x more complicated, but it is also 100x more rewarding.
Yes, yes. I love it. I love it. So now, can you share the moment or experience that made you decide to leave corporate America and fully commit to real estate investing?
I think there's been several in my life. So the first one was back in 2015. I was very stressed out. I had a high-paying six-figure job. I was working at Fortune 500 company, Capital One, and the first sign that something was off was related to my health. As we all know, there is a mind and body connection, and I got really sick. I had a herniated disc. I couldn't move for about 3 to 4 months. I took some time off, and I started to wonder, is this the career path that I want to continue to be in? Because I did achieve American dream. I had a good paying job, a house, an expensive house in Silicon Valley, 2-car garage, 2 cars, wife, 2 kids, and everything. But internally, I was not happy about it. And that's where the idea started was, well, that's not the career path that I want to continue to be on. So I started exploring, I started investing, and this is how I found out about the real estate investing at that time. Now, I did consider leaving corporate job at that time, back in 2015, but I didn't. I actually did went back into the corporate after 6 months sabbatical with an idea that I will start investing and I will figure it out while building this thing part-time. A lot of people do quit corporate world, in my opinion, too soon. And I was not ready at that time. I asked myself, just like what you asked me, is what help you is. And at that time, I was not seasoned enough to be entrepreneur. I think a lot of us get excited about the possibility, but as I said earlier, it's 10x harder than you ever think. And I realized at that time I lacked certain skills. And I did stay at the corporate world for another, not 1 or 2, I stayed for 6 years. And I ultimately left in 2021 because at that time I had so much momentum going. I was 100% sure that it was time to leave. And I had the skills. I had a lot of experience, a lot of learning. I built a lot of track record. And it was a very smooth transition when I left, and I never looked back since then.
Yeah. I like what you did. You ask yourself those questions like, are you ready? Are you ready to leave corporate America? Yeah, in your mind, you probably wanted to, but you, like you said, you didn't have the skills yet as a full-time real estate investor or the knowledge base to go full-time as an entrepreneur. And I also do agree with you. A lot of people do jump out, because everybody likes to be on their own. I want to be an entrepreneur, but easing into it to me seems to be the easiest way and the best way.
Yes.
Yeah. So now you've been involved in over $2 billion worth of transactions. What would you say has been the most pivotal deal and why?
Most pivotal deal, I probably would say the last one, to be honest with you. We've tried all different kinds of investing as a company, as fund managers, coach, GP, and me as LP. I've done a lot of deals and realizing sometimes that it's time to pivot, not quit, but pivot and change the strategy, change the direction where you're going is very critical. So for the most part, we've done a lot of multifamily transactions, and some of them have done extremely well. We've had 2x returns. We actually had, in my personal portfolio, even higher than that. But also there's been several ones that didn't go well, including some of the losses. And as we all know, commercial real estate kind of exploded because of interest rate, bridge loans, capital calls, you name it. And we ask ourselves the question, where are we going moving forward? Because we knew that times are changing because of a variety of reasons that I described, including, explosion of AIs, market shift, market fundamentals. And we made a strategic decision to move away from one asset class and sector in commercial real estate, which has primarily been multifamily, although we've done some alternative investments, to purely focus on one asset class and sector, which is medical real estate, which we've done certain investments as well that have done really well. So instead of continuing with primarily multifamily and supplementing the portfolio of investors with other sectors, we decided to focus on just one, just become truly experts in one sector, one asset class, which is medical real estate, triple net type of medical offices with triple net protection and corporate guarantees, extended leases, more predictable lease escalations. And I can talk about, for another hour or two about why. But that was not easy because, sometimes you're programmed to do certain things and you know that it has worked in the past. Yes, it didn't. But for the most part, it did. Why don't we just continue? The market will recover this and that. But no, we decided that's not the direction we were going to go. And it took us some time to do that. And I also want to mention to listeners is this internal dialogue, it's a battle that you're going to have continuously with yourself. Is this the right time? Is this the right strategy? You'll never know until you execute. But I think I also want to mention the battle with the ego. There is another component that you need to listen to your inner voice, which is intuition. A lot of us know actually the answer, but we try to push it away and let ego win that battle.
Right. So let me ask you, since you said you guys are now into the medical real estate space, now, how hard was it to transition your investor base into, hey, we're leaving multifamily. You guys have been with us all along with multifamily, but now we're going over here to this new asset class. How hard was that?
It was not hard at all. So while we were still doing multifamily, the theme and hypothesis that we had was, are you really diversified if you invest in several syndications, passive investments, active investments, and multifamily, even though they're in different markets with different sponsors and operators? If you've done 1, 2, 3, are you really going to be more diversified with the fourth one? Probably not, because once the sector and the entire multifamily is not doing well, we're all affected. We're all interconnected. This economy is not something where if something happens in Europe, we're sleeping here in America thinking, oh, there is no impact at all. We're all interconnected. And we did launch a healthcare deal as one of the deals that we've been covering for a while to the existing list of our investors that are part of the WealthyMind Investor Club. And it did really well. And it's continuing to do well. And it was sort of just a validation that, yes, this is good to diversify, but then by observing the performance over the last several quarters, actually it's been more a year, we realized that from a risk adjustment perspective, from the return, it's actually the best asset class that we've done investment. And strategically, we decided to focus on, let's put multifamily away. There's a lot of people that are doing this. We found other partner operator who has a lot of deep experience in this asset class. As we all know, real estate is a partnership game. It's about relationship and building strong foundations that can take you a lot further than you do it on your own as a solopreneur. And we just decided to double down what's working. Okay. And it's been great. Investors are happy about it. And it's also not a super amazing competitive field out there. There's hundreds of deals once you start joining investor clubs of other syndicators. But there's very few medical office triple net leases, passive investment type of deals because of the different focus, different skill set that is needed.
Yeah, I totally agree. As I started to do my research on you and your fund, Wealthy Investments, that you guys have went over to this medical space. And I totally agree. I don't know a whole lot of people or funds in that space.
Not that many.
Yeah. So many investors are nervous about giving up control and being passive. How do you help them get comfortable with syndications and funds?
That's a great question. First of all, passive investing is not for everyone. If you are a control freak, which I consider myself to be, that's not the right thing for you unless you start working on understanding the space, educating yourself, and tell yourself, listen, yes, even though I could be potentially control freak, there is no way in hell I could acquire an asset that is worth $50 million on my own. Let's be realistic. Most people do not have a net worth of doing so. And another thing sometimes passive investors realize with time and education is that the amount of time that it takes to actually manage your own portfolio, even one asset sometimes could be a trouble asset, is quite a bit. I do own a rental home, only one as of today. I've owned more in the past. And every month or every other month, there is something happening. It's broken toilet, broken pipe, pool screens. There's always there is always something. And some people actually don't want to have that headache of being a landlord. And passive investing is a great vehicle for those types. Now, some people are really good managers. Some people don't even have property managers to doing that. So it's about educating. It's about asking yourself, again, questions, stroking your ego, but also be honest with yourself. And ultimately, maybe doing a little bit of both, maybe trying it out and seeing what works and what doesn't. Now, you need to be ready and you need to have enough net worth to play this game. I think a lot of people, when they start syndication investing, they don't have enough net worth, they don't have enough knowledge to try it out. When I say try it out, your net worth need to be over $1 million, where if the deal is not producing enough cash flow for maybe a year, you will be okay with it. A lot of people start to freak out when they don't receive their quarterly distribution. End of the day, it's a risky investment. You're trying to achieve above market returns, and there will be some fluctuations. If you're not okay with that fluctuations and amount of risk that it involves, maybe you shouldn't be investing in real estate at all. This is not a bulletproof 100% investment. Right. So what I try to do, I just ultimately genuinely try to share my story, my wins and losses, educating people about it and asking them the right questions and giving them options. It might take 6 months for somebody to decide to invest. It might take somebody, in our case, we have a lot of investors that we've researched and have worked in the past. Sometimes it would take a year and a half, 2 years for some people to finally say, yes, I'm ready to invest. And for some people, that time might never come. And it's okay. Everybody goes at a different pace.
Yes. Yeah, that's true. That's true. So again, I know that you're co-founder of your company. So how do you and your partner decide which asset classes and markets to target for your funds, especially in today's economy?
You're gonna like this episode, so please like, comment, and subscribe to this channel so you can be notified when the next episode drops.
Well, and at this point, the asset classes is kind of, we narrowed down our niche, right? It's only medical office spaces. So we don't look at storage. We don't look at multifamily. I unsubscribed from pretty much everyone. I just want to keep close knit to a few newsletters to see the deal flow, to see what's going on. But I have unsubscribed because some focus is very important. You cannot be looking at 10 different markets simultaneously. In addition to that, my business partner and I, we don't even look for the deals at all. Why? How? That's wrong, right? Well, guess what? We have a partner. We have a partner who has a lot of experience in acquiring medical office real estate, who's done it before, who's operating them actively. And he is the one that is constantly looking for deals and talking to brokers. And when the deal makes sense, we have a committee. We run the analysis, obviously underwriting, projections, you name it. And then we make an ultimate decision about the purchase price, about whether we're moving forward or maybe we're not. And it's looking for the, needle in a haystack because it's a competitive market and we're excited about the future. But it's about dividing and conquering.
Right.
A lot of times in the beginning, I'm just going to add in a moment, important thing is we think as entrepreneurs, we're Superman. We can do it all. We can manage the deal, keep looking for the deal, talking to investors, underwriting. At one point, you'll realize you're actually not as good as you thought. You don't have all the skills that you have. And it's about a lot easier and you can grow a lot faster by aligning yourself with the right people and the right partners.
Okay. So now let's go into that a little bit. Like, how did you guys meet this partner with the experience in the medical space?
Yes, that's a great question. So in our case, my co-founder and business partner, Ashish, we've known each other for 25 years. We actually work together at the mortgage company. So that's where we learn about underwriting risk, real estate. And through networking and through introductions and going to different events, we just bumped into a solo entrepreneur, aspiring syndicator investor, and we just connected. Sometimes you just know that the synergy is there. Now, sometimes your intuition says, yes, it's the right guy, but you still need to understand it's a dating game. You cannot get married the next day you meet somebody, right? So we've had several conversations over the Zooms. We decided to meet in person, flew to a common location, and we've been in touch for several years now. And that relationship is continuing to grow and improve. We've been into each other's homes. Our families met each other. So we're talking about a close relationship, because partnership, it is like a marriage. And a lot of people take it not as serious, but I strongly recommend not doing so. You have to take this seriously, because sometimes things will go not the way you plan. And sometimes you want to know about the character of the person early in a dating game, in this relationship, versus later, to avoid potentially huge mistakes.
Yes, I definitely second that. I agree totally. Yeah, you got to go on several dates before you
Yes.
decide to walk down the aisle together. So, Alex, you had mentioned actually before I asked that question about, aligning yourself. You had mentioned aligning yourself, so because you try to do this and you try to wear so many hats. So, as a fund manager, you're responsible for deal structuring, due diligence, investor relations. Which of those do you find the most challenging, and which of those is the most rewarding?
The most challenging is, I think, due diligence. For the most part, it was challenging in the past. Now it's getting a lot better because of my new partner that we found out. And he has a financial background, and it has helped quite a bit to go through the due diligence process, versus we thought in the past that we did enough of due diligence, of underwriting, running background checks, visiting the sites. That's not enough. You have to go even deeper. It's still a challenge for me, but luckily, it feels like this gap is a lot easier, especially around financing. There's a lot of underwriting models that we have been shared in the past that we thought were conservative, and we actually did hire somebody in the past to validate those numbers. They were not conservative at all. So now we're looking at it through a totally different lens, and we have somebody who used to be a CFO. So his financial background is definitely help us. And the easiest part is I'm extrovert. I like talking to people all day long, and it comes naturally to me. I can talk to people that I have good relationship. I can build new relationship. I can outreach to strangers. That's a skill itself that some people do, that comes kind of naturally. And some people, it's very hard, but that's a skill that can be learned.
Yeah, yeah. I'm one of those people where, like, you're an extrovert. I call myself an introvert extrovert. I'm more introverted, but when I start talking about something that I love, it's hard to shut me up. It's really hard to keep me quiet. So now, how do you balance the needs of investors who want strong returns with the need to manage risk prudently?
That's a great question. So first of all, you need to get deeper into it. What does strong return mean? Because it's very different for a lot of people. Strong return for somebody, it's beating the stock market of 8 to 10%. Strong return means for somebody 30% IRR annually. And most people chase returns. It's just a human nature. We all want high returns. And then sometimes, remember we talked about the ego. We get carried away with high returns. We forget about the risk-adjusted returns. We forget about the risk. We justify in our mind, okay, if this was projected at 30, even if I get 10, 15, maybe even 20, I'll be okay with it. Well, the 30% IRR projected return might produce zero. it might actually produce loss to your investment. There is a reason why it's 30% because it would consider high risk type of investment, right? So it's education. It's building enough ammunition as a passive investor to understand what does strong return mean to you and what kind of risk are you willing to take. When you look at the investment, you need to understand, is it a positive leverage? What is the LTV ratio? How much reserves do you have? How much experience does this person have? What could go wrong? A lot of investors, unfortunately, including myself in the early beginning, we never ask these tough questions. What could go wrong? We always think that everything will go according to the business plan, which never happens. There's always going to be something on, off. The market will pivot. The competition comes in. New constructions that will be built, maybe close proximity, tariffs, new president, taxes. There's so much variations. And how to mitigate these risks, right? That's one of the reasons why we decided to actually pivot into medical real estate. It's not bulletproof, definitely not. But we're looking for investment that have 10-year lease, ideally more than that at the time of acquisition. We're looking for deals that have predictable lease escalations of 3%. So it's a built-in escalation already. Instead of guessing, will the rent go up next year? Sometimes it does, more than 3%, sometimes it's 10%. Well, guess what? Sometimes it actually goes down. And sometimes it stays the same for many years, right? So it's asking these tough questions and truly educating yourself, because there could be a lot of things that, I call them sort of blind spots that a lot of us, we don't even know sometimes what could go wrong and what could ask. And it's about education, asking other people that are more experienced, maybe asking them, what should I ask when I evaluate this new investment in regards to what could go wrong?
Yeah. We always think, no. That's good, because that is so true. We all seem to forget to ask that question. Okay, what can go wrong? You answer that question. Great. Now, what can you do? What will you do?
What are the mitigation strategies, right?
Yeah.
Are you prepared for that?
Right. So true. So you're, again, a fund manager, been a fund manager for a few years. What are some mistakes do you see newer fund managers make, and how can they avoid them?
Well, number one mistake, I think we briefly touched on that, is thinking they're the Superman, thinking that they can do it all. It's a lot of work being a fund manager, looking for the deal structuring, managing investors once the investment started, understanding the capital stack, analyzing the deal correctly. A lot of us fund managers, we don't have the skill to analyze the deal really well as far as potential risk concerned. You need to outsource these stocks. I'm 100% sure on that, unless you have a finance degree, because a lot of the underwriting models that are being pitched and continuously being pitched are just very, I would say, extremely optimistic. Not just optimistic, but extremely thinking about the best case scenario. Like we know from the past experiences is that pro forma and projection, this is the best case scenario. Well, best case scenario sometimes doesn't happen, as we've seen in the past. So aligning yourself with mentors. I wouldn't be where I am without a mentor, without the coaching, without additional guidance. Wherever anybody wants to go, somebody already there. Somebody already been there. Somebody already made so many mistakes. Why repeat them? You need to have a mentor if you're starting out. Somebody who's been there, who's done that, who can be your guide and genuinely help you along the way. And it's divide and conquer. I can't emphasize this enough. I think you need to very early on find out what is your strengths and what are your weaknesses, and just bring other people that can elevate you with your weaknesses by strengthening your strengths.
Now, for someone looking to diversify their portfolio beyond stocks and into real estate funds or syndications, what should they look for in a sponsor or fund manager?
Yeah, that's a really good question. So I had a checklist in the past, and there's a lot of them out there that kind of standardized, to be honest with you. I was a big believer in a track record where the investors, would ask, how many deals have you done? What did you do? Then I found out that a lot of the deals that go bad, other people just don't talk about it. They don't include in the track record. And it's a problem. It's a huge problem. Ultimately, it comes down to you as an investor in regards to the trust factor. Even the track record is not bulletproof. Even the reference is not bulletproof. Trust me, we've done this before. We've done a lot of deals with amazing track records, reference checks with investor references, site visits, due diligence, underwriting, paying consultants to validate underwriting models, running background check. It's not bulletproof. I think it's about trusting your intuition, your gut feeling about the deal. Don't fall in love with the deal, but about the sponsor by getting on the call with them, maybe having several calls, and ultimately deciding, do I trust this person value? Do I like the answers that he's providing? And then you need to come up with a list of very tough questions and just see the reaction, ideally over Zoom call, where you see the face expression too. Because once you make that investment, as we all know, as a passive investor, your funds are totally locked. You are trusting the person on another line, on another side of, I want you to say the world, hopefully in America, that they are honest people that will do the best that they can to make sure that your funds are safe and they're going to produce positive outcome. That's all I have to say about that.
Yeah. So again, you've been in this since 2016, real estate. So in your experience, how have investor appetite and behavior changed over the past few years?
Oh, it has changed quite a bit. I think looking back, hindsight is always 2020. When we were starting out, we started in 2020. From 2020 to 2023, there was a bubble. There was so much demand for real estate investing that people that should not have been investing have continued to invest because everybody talked about it. And right now, we're going through a different phase where investor appetite has died quite a bit. A lot of people have accumulated many scars. There's been many capital calls when the original investment is not enough and there's additional funds that are needed to support the deal. There's been deals where investors invest, let's say $100,000, have a capital call, add more funds, and the deal collapses 1 year later. Imagine you have contributed twice to the deal and lost money. So there's been some deals unfortunately like that as well that we know of. And people talk to each other, right? So investor community is genuinely concerned in regarding that. Now, having said that, this could be one of the best time and opportunities to invest. Why? Because the market got collapsed. The valuations on some of the deals that we're seeing, 20, 30, sometimes 50% down from the peak times in 2023. So it takes guts, it takes feelings. For the people that have enough net worth, they're continuing to investing. They're not able to time the market really well. They continue to invest and see this as an opportunistic time to invest. I can tell you based on previous experiences and patterns, it's all about the patterns, the history repeats itself. We will be booming again. It's not a matter of if, it's just a matter of when. This particular cycle, I predict based on talking to other people and the patterns, will eventually end and the investors will come back. There will be a window between now and probably the next 2-3 years where there will be very good deals at very attractive returns, and then the next boom will carry on.
Oh yeah, definitely. It's going to take some time. It's going to shake itself out. And then, we'll go back on that tear for the next, 10 to 12 years.
7 to 10 years.
That's traditionally how it goes. Now, Alex, you're deeply invested in personal development. How has that shaped your approach to leadership and investing?
Well, that's one of my favorite topics. So I've been a huge Napoleon Hill Think and Grow Rich fan. I think it shaped my life quite a bit, even when I had early on aspirations to become an entrepreneur while just starting out in the corporate world. I always knew that at one point I wanted to do my own thing and I will live and build a life on my own terms. So I've been rereading this book on and off throughout 30 plus years. In addition to that, I'm a huge Tony Robbins fan. If you've never been to a live event, do me a favor and sign up for it as soon as possible. There is one coming up in LA, end of the year. It changed my life. So when I was talking about 2015, when I had that sabbatical and I had a severe herniated disc back issue, is I actually went to one of his events. And he always talks about, people usually find me and look for some kind of a guidance and advice where their life sucks so bad. They're looking for the answers and they're hitting the bottom. I was hitting the bottom. I was living American dream, achieved six-figure income, house, all this and that. But internally, I was miserable. I was not fulfilled. And I may, he does have some powers of hypnosis and, some other leadership skills and persuasion. He hypnotized me to such level where I made a promise to myself at that event back in 2015 in Jersey that I will never ever settle for a job, corporate career, that I will not be happy, and I will leave corporate world. I didn't say when, but I planted the seed in my mind that this is not a question of if. I remember the dream when I was started to read Think and Grow Rich in my 20s that what happened to it? I wanted to leave. I didn't want to be stuck in the corporate world forever and wait for the golden watch. So I made a strong commitment and a promise to myself. I started investing after that. I went to another event. I met a real estate investor who became a good friend of mine and a mentor. And that was the beginning of my journey into real estate. And I have continued to go to different Tony Robbins events. I went to 10 of them. I've made a lot of good friends at those events. And I can't thank him enough. Tony Robbins changed my life. And I believe in continuing to grow and improve myself daily. It's a battle. It's a daily battle with yourself to continuously improve. Never ending. I think he calls it kanai, a never ending, continuous and never ending improvement. That's what Tony Robbins, one of the methodologies that he uses.
Yeah. One of my biggest sayings is it's me versus me, every day.
Yes.
It's one of those battles. And, sometimes, hey, me wins. Yeah. So, Alex, you've also made giving back a priority. How do you incorporate philanthropy and service into your business and personal life?
Yeah, thank you. So unfortunately, I lost my father quite some time ago due to cancer. So I contribute to Cancer Research and Society just to continue this battle against this disease. In addition to that, I volunteer my time by feeding homeless, sometimes helping pack food for the people that are less fortunate than me. Sometimes I bring my son as well because I want to teach him the lesson of giving back to less fortunate and just genuinely helping others as well.
Okay. Wow. How time has flown, man. Just sitting there, talking about the medical and then talking about your transition from corporate America, and your experiences as a fund manager and all that. Time has really, really flown by. So before we wrap up this podcast, Alex, what's next for you and WealthyMind Investments? Any exciting projects on the horizon?
Yeah, so we've got a couple of deals under contract right now that we're working on. One is a dental office, one is Orion Center, and we're going to continue to grow slowly, organically. We don't want to be chasing high returns anymore, those risky type of deals anymore. We are concerned about risk-adjusted returns, investor capital preservation, tax efficiency, positive leverage. There will be bigger deals in the near future, and I'm sure the good times will persevere and be replaced with bad times. But as an entrepreneur, it's a journey. As an investor, it's a journey. You need to have a longer term look, just like Warren Buffett says that sometimes we tend to chase, high yields, high returns. If you just remain prudent about your long-term investment journey and make ultimately better decisions as you grow older. I have accumulated a lot of gray hair over the last 3-4 years because of some of these deals, and just manifest and design the life on your own terms. You are the captain of your ship and you will go wherever your mind and ultimately actions take. So I'm excited about the present. I'm excited about the future. And thank you for the opportunity to share my story.
Right. All right. Well, Alex, it's been a blast having you as our guest today. And as we close out, please tell my listeners where we can learn more about you, get in touch with you, and learn about all the fabulous things you have going on right now.
Well, thank you, Cedric. So if anybody interested to keep in touch or learn about some of the deals that we are working on, you can find us at WealthyMind Investments.com, or you can email me at alex@WealthyMindInvestments.com. Thank you.
Awesome, Alex. Again, I want to thank you for your time today and all the wisdom you have provided to my listeners. And I want to thank you, our fans, for tuning into the Syndication Real Estate Podcast, where we want to add value to you in your investing business. Please tune in to our next episode, where we will interview another fantastic investing professional. See you next time.
Thank you.
Thanks for listening to the Service to Syndication Podcast. We want you to know that we love and appreciate your support, and we are grateful about being a part of your journey to becoming a successful real estate entrepreneur. Please share this episode with a friend who you think will get a lot out of what you just heard. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be in all areas of life. And if this was really valuable, share it on your social media stories and timelines. Thank you for watching and listening. Now go be great.